Welcome to Beyond Bitewings, the business side of dentistry, brought to you by Edwards & Associates PC. Join us as we discuss how to build your dental practice, optimize your income, and plan for your future. This podcast is distributed with the understanding that Edwards & Associates PC is not rendering legal, accounting, or professional advice. Listeners should consult with their business advisors before acting on any of the information that is shared. At Edwards & Associates PC, our business is the business of dentistry. For help or more information, visit our website at eandassociates.com.
Hello and welcome to another episode of Beyond Bitewings. Today we have here with us Lynn Ledbetter.
Hello.
Robert Edwards.
Hey.
And myself, Ash Fezula. And we are going to be talking about the infamous topic of PPP today.
Yay.
Yay, right?
Reminds me of a Dolly Parton song, Here We Go Again.
So true. And before we get started, I also want to wish everyone a happy new year. I know there's been a lot of changes and we are going to talk a little bit about, PPP and the new bill that just recently passed. But again, with a positive note, let's start the new year.
Yeah. We were hoping it was going to be completely different and better, right? And I don't think that has been the case. It is. We're on our way. We knew it wouldn't be like a light switch change. So
true.
But with the new changes and the new law, every day we're learning something new and there's new information. So it's like April and March all over again in that regard. So hopefully this will be the only big thing that's going on that's different. Knock on wood there, but
right.
that's what we're hoping. So let's talk about the changes that came down with the stimulus that our clients care about related to PPP. So what are some of the changes that happened? I think they were all good. We acknowledge they're all in the client's interest. So
they were all positive. They were all good. And they were all amazingly things that I think we and the clients hoped for. Mm-hmm. But now that they've happened, nobody's mentioning them. They're moved on to let's get another PPP loan.
That's true. That was part of it, actually. That was part of the stimulus that came through was another round of PPP, and we'll talk about that. But I think the other changes that we had hoped for that we believed we would get, and we did get, is the simplified forgiveness for loans under $150,000. So that had already been simplified for loans under $50,000, PPP loans under $50,000, and they extended that to $150,000. We'll talk about that more later. But then the big one, I think, was the deduction of the PPP cost.
Absolutely.
Because under the old rule, we were not going to be able to deduct those for tax purposes. And that was a huge phantom income surprise that people weren't expecting. And we warned everybody their tax bill would probably be high. And now we're going to get to renege in a good way, I guess, on that statement. So that was the good news. Anything else that I'm not thinking of? Oh, yes.
The EIDL forgiveness, the EIDL grant is no longer a reduction in your PPP forgiveness.
That's true.
That's another free up to $10,000, depending on how much you received, if you received any at all. And the fact that you can get the employee retention credit now in addition to the PPP loan and not one or the other.
Right. Yeah, because under the old rules, if you got the PPP, which was infinitely more valuable than the employee retention credit, then you couldn't do the employee retention credit. And they took that prohibition off the table. So now if you qualify for the ERC, then you can do that even if you got a PPP loan. The question is going to be whether you qualify. I think most of our Texas clients are going to qualify because of the government. The governor required shutdown for non-emergency procedures. A lot of other states will as well, but it's going to be on basically an area-by-area basis. It's not a sure thing. So,
is that like a state-by-state basis or subdivision of the state?
Well, if there was a state shutdown, like Texas had a state shutdown, that's going to apply.
Okay.
But there were some places, I think, like in the beginning, Dallas County had a shutdown, but some of the other counties didn't before Abbott got involved. So if he hadn't gotten involved, then Dallas County dentists may have gotten something that Collin County didn't. So I think if your state didn't have a mandated shutdown, then if you go to your region, you still might have a chance.
Good.
So depends. Basically, it depends. But most likely, I would say.
Now, there's also this other way of qualifying for the ERC credit as well, right?
Right.
Aside from
good point. Yes. So if you have a greater than 50% reduction in income in any quarter of 2020 versus 2019, so that's your patient collections, your revenue, whatever you want to call it, cash that you received as income in your hand, if that reduced more than 50%, then you qualify, whether there was a shutdown or not. So it could be just economic based, and that's going to be easy to show.
And in that case, correct me if I'm wrong, but I think you qualify during the quarter you were 50% or less, and you continue to qualify until you go back to 80% or more.
Right. That's right.
Okay.
I actually know those rules fairly well. It's the one under the government shutdown that I don't know. I guess it's just the period during the government shutdown. That makes sense to me, but I haven't actually looked into those rules because we didn't think they were going to apply. For whatever reason, it seems obvious that they should apply, but there were several reasons that no one believed they were going to apply to most dentists, but we think they are now. And so I need to go research those. I'm not sure.
I think a lot of people thought it was you had to do 50% and be shut down.
It's definitely an or. It's definitely an or. So that's the good news.
And what about some of the clients probably wondering, where do I take that credit? How do I take that credit? What quarter do I take that credit about?
Yeah, a lot of those details we don't know yet, and we can probably do a whole episode on employee retention credit. We're hoping the IRS simplifies the process, but as of now, the only way I think to take the credit would be to amend, and you're probably going to be looking at the second quarter of 2020. So you would have to go back and amend that 941. It's going to be difficult. It's going to be time consuming in the fact that the IRS is moving so slowly that it's going to take forever for it to be processed and then forever for it to be refunded. And by forever, I mean months. You're looking at, I would say, 9-month minimum on the process. And I think that's in a good case.
Do we know yet if you can take the credit against a future quarter, or do you have to get it refunded?
You could take it against the current or future quarter if you had taken it at that time, but it wasn't available at that time because of the prohibition. So as it is now, you're probably going to get it refunded. You could take it against a future quarter, but I think you would be allowed to, but logistically I wouldn't, because the timing is never going to work out with the IRS. So you're going to say you have this credit available and you're going to short your deposits, but they're not going to have processed it and they're going to say you late paid, and that would be a nightmare. So I would go refund all the way on that.
Because they're so quick in processing returns now.
That's right. That's right. So we're hoping the IRS comes up with some easier way so that perhaps on a current 941 you could claim it, which is completely different. Then you can claim it electronically. There's no backlog of the IRS. And so a lot of things are taken off the table. But at this point, there is nothing easy about it.
Yeah. Okay.
And it's not super urgent for them to apply for this credit right away because they can technically amend the 941 for up to 3 years.
Right. Right. So you're looking at roughly the statute would run out in 3 years from July of 2020.
Right.
So you've got time.
Yeah. Okay, good. So
We're not even a year yet.
All the guidelines are out.
Right. Right. So yeah, that one is low on our list to try to figure out, unfortunately, because we do have some time on that. So let's talk about PPP round 2, because that's really, this podcast was going to be all about PPP forgiveness. And then when PPP round 2 became a reality, nobody cared about forgiveness anymore. All the questions now are, tell me about round 2. How do I get
more
it?
Money?
What do I do? What do I need to know? And so we'll focus on that. If we get to forgiveness, great. If not, we'll come back to it. Again, forgiveness is not urgent. People think it's urgent, but it's not as urgent as the round 2 would be.
So how do I calculate my benefit for round 2?
You want to know the rules, or do you want to know what the bank's going to say? That's the question.
That's an interesting question of itself.
I mean, there are 2 ways to calculate it. You can calculate it based on 2019 average payroll cost or 2020 average payroll cost. So now that we're a year ahead, under the first application, it had to be based on 2019. Unless you weren't open, there was some special rules. But if you were open all of 2019, you based it on 2019, and it's 2.5 months worth of your average 2019 payroll costs.
Unless
Unless
you're a, restaurant?
Oh, yeah, I don't even know,
Okay.
didn't care. Yes, you're correct. There are different rules for
We have some
that
clients that have
NAICS
restaurants.
number.
Yeah.
Those do not.
They're 3.5 times.
Yeah.
Yeah,
Is that what it
3.5.
is?
Yeah.
3.5 times.
Yeah. But who is it besides the restaurants?
It's
Mostly hospitality.
yeah,
That's the term
hospitality.
they're using.
Hospitality, that's right. I never remember that.
Yeah. So your lodging and bar and grills and things like that.
Okay.
So music venues, I think, may be part of that. I'm not sure. But anyway, that's for another day and time. So, yeah. So if your 2020 payroll costs miraculously are higher than 2019, which they could be, but I think that's going to be a rarity.
It's rare, but if they weren't in business the full year 2019, then
That's gonna make a
2020 might be
difference.
higher.
Right. But so you're probably going to be applying for the exact same amount, assuming you applied for the right amount on your first loan, then you're going to apply for the same amount. And according to the rules, if you go to the same bank and you apply with the same numbers, all you have to do is basically submit your application. But we're finding out that rules and practicality are not necessarily the same thing. Ash, what did you discover?
Oh, yesterday I had a very exciting conversation with a lender with one of the bigger banks.
Yeah.
And he basically told me that, yes, it is true. Our system may have the 2019 information. However, there is no guarantee that the new loan application will go to the same loan officer.
Of course.
And this new loan officer there's a possibility he's not going to take the time to dig through the system to pull out that old information.
Yeah, here we are in 2020, right? I'm assuming they can pull up your account and find the old information at their fingertips because that's what we would be able to do in our office, right?
Right.
Apparently that's not the case.
No, that's not always the case. And they said that, in an event like that, there's a possibility this officer may just move on to the next client. And
Right.
that may push you far behind.
And it sounded like more than a possibility, like that would be
Correct.
the likelihood.
Right, is absolutely true.
So even though you don't, under the SBA rules, you don't have to provide the information again, you don't have to provide the support again. If the bank asks for it and you don't do it, they're going to
Provide it.
potentially pass you by.
Correct.
Okay.
And even if the bank is only asking for 1 quarter's worth of the 941 report, they've specifically said to include all 4.
Okay.
It makes it easier for them to do the calculation on their end.
Okay.
It just expedites the process.
What we thought was going to be simple is going to be just as cumbersome as the first round, most likely.
Well, and isn't the actual rule now that if your loan you're requesting is below $150,000, you don't have to provide documentation?
That's specifically for the reduction. We didn't even talk about that piece.
Right.
The reduction in revenue of 25%. So to even qualify for round 2 of PPP, you have to have a reduction in revenue of at least 25% of any quarter of 2020 versus a quarter of 2019. Now, these are assuming you were open in 2019. There are some other rules if you weren't open the whole year. But if you were open in 2019 and 2020, you had to have a 25% reduction in any one of those quarters to qualify for round 2. So that is what you don't have, supposedly, under the rules, don't have to provide support for.
Okay.
But you would still have to provide support for the payroll cost.
Okay.
But it sounds like we're probably going to have to provide that support as well. So there's a difference. Again, and this happened last time, there's a difference between SBA rules and bank rules. And unfortunately, the banks are the ones pulling the switch. So you have to go with what the banks say, even if they make it more difficult.
No, that's true.
I know the first round, we did a lot of educating of the banks because they are behind on the rules. And that's not a criticism. There were changes. The changes were coming so fast that they just could not keep up. But this is the same thing all over again. We know what the rules are, and the banks don't know what the rules are, unfortunately.
They have a better idea, but
That is true.
some of them, I know some banks that were involved in round 1 aren't even doing it this time.
Really?
Yes.
Just not worth the trouble?
That's what I've heard.
Okay.
Yeah, I could name a few.
Okay.
I've heard that exact thing. It's not worth the trouble from at least two banks.
Okay.
Right. And they've categorized the banks too, right? They have these various tiers.
Right.
You've got
Of
your
size.
micro cap banks, and I don't know what the middle one is, then your large money center banks.
Right.
And the micro cap minority owned banks are going first.
Right.
Yep. They will be processing the applications first.
And I know they were supposed to open on Wednesday.
That is.
They were supposed to open Wednesday, which is yesterday.
As of our
recording. So this will be a few days old by the time you hear this. But my point is, I don't think that became true. I heard that they weren't going to start opening in reality until Friday.
Well, they're accepting applications, but the SBA isn't allowing them to forward them yet.
Okay.
So they're accepting them and putting them in line in the order in which they receive them.
So
I've been telling clients, go ahead and apply so you can get in line.
Yeah. Now, they didn't disperse all the funds out of the first PPP round. So we're not saying you better get your application in today or you're not going to get any money.
And less people will qualify this time.
That's true.
Because not everybody had a 25% drop.
It's true.
Right.
Yeah. We're finding, what, about 75%?
Honestly, I don't know that.
Yeah, I think at my last check, it was roughly about 75% of our clients had the requisite drop.
Okay.
Not all of them. So that's the good news.
Yeah.
Except for the ones that dropped like 22%. Like
yes.
just not
Very
enough. Yeah,
unfortunate.
that's unfortunate.
Yeah, I've talked to a couple of those too.
So the quarter that they should be looking at primarily, especially for our clients here in the DFW area, it should be quarter 2.
Quarter 2 of 2020 is most likely the one you're going to qualify under.
And I wouldn't think that would be just in the DFW area.
I agree.
And not just in Texas, but because most people were closed the last week or 10 days of March, all of April, and the first week or 2 of May.
And some much more than that.
Yes.
But at least that much.
Yes.
And so I don't know if anybody opened as late as into the second quarter. I think they probably did. But the vast majority were open most of the second quarter and most of the first quarter. So it's most of the third quarter they were open and most of the first quarter they were open. So it's your second quarter that's going to be the key. If you don't qualify for that one, you probably aren't going to qualify.
Yeah, I agree.
So now there is a provision where you can look at the entire year, but even though that sounds good, you actually would have to be down more than the 25%. So that's probably not going to help.
Because if you do look at the whole year, you have to have a 25% decline year over year. So you must have had 25% decline quarter over quarter.
Yeah, I agree.
Okay.
Yeah. Anything else on that topic?
Yeah. There was actually this interesting question I got from a client recently. I guess she had the application in front of her for the PPP round 2. And there was a section there that was asking for, please put in your calculated monthly payroll amount. Now, because round 2 is allowing you to pick between 2019 or 2020, she was saying, okay, so the 2019 is fairly easy. I just look at the total payroll divided by 12 and get my monthly payroll. However, 2020, because we had the 8-week shutdown, do I divide it by 10 instead of 12? Because that would significantly give me a higher monthly payroll expense.
I don't have a good feeling about it working that way.
I'm pretty sure it does not work that way.
I'm pretty sure it does not work that way.
Yes. So
that's pretty creative for your client.
It is.
It was. I was actually very impressed. Lucky for her, I had the conversation with the lender after having this conversation with her. So I actually asked them, I'm like, what do you recommend? This person has a point. And they were like, no, the monthly average will be calculated divided by 12. It doesn't matter whether it's 2020 or 2019.
Right. So the fact that you were closed is not going to be a factor.
Correct.
Basically.
So it might be in your favor to use the 2019 numbers, unless you're in that weird situation where you were Schedule C, moved to an S Corp in 2020, and then you're paying yourself a salary and your payroll expense went up.
Right.
But other than that, I think for most people, 2019 payroll, the numbers you've already calculated during the first round of PPP should be in your favor.
Right.
I know I've heard from some clients that now that they're going back and looking at it, they realize they calculated it wrong the first time. They didn't include employer matching contributions to the 401k or some such thing, or insurance or whatever. So they're refining their calculations this time going forward. And honestly, since they never ran out of the money in the first round, and there are less people qualified this time, I really don't think they're going to run out of the money this time.
Right. I agree. Yeah. I mean, you never know, but I agree. But yeah, so when you talk about employer match on the retirement and things like that, there was a question when we were applying the first time around, if I pay my whole retirement contribution that month, do I get to deduct that? And we now know those answers better than we did before. So the answer is no. You get to use 2.5 months, basically 10 weeks, however you want to say that, of that cost. It doesn't matter that you paid at all. It has to be incurred, which means it has to belong to that period. And all the same rules apply for PPP2 as PPP1. You have to spend 60% on payroll. The other costs are for utilities. Rent, mortgage interest.
There's a few new
They did add PPE.
now, and they added
Other.
They also added things you had to add to your office to socially distance, like the plexiglass shields and things.
Right.
They added that. You can use that to pay for those.
I counted that as PPE, but
Okay.
I see what you're saying. Yeah. So all of that, so all the masks and all of those get to be included, but that's still limited to 40%. So it really doesn't help us a lot because we had enough rent and utilities to get to that 40% number. So 60% still has to be on payroll items. That includes your employee insurance, employee retirement, things like that. And I think the state unemployment was included. That was the only tax that was included. Yeah. There were like a couple dollars that were included on most of our calculations.
I think ours was $24.
Mm-hmm. So all of that is still the same. There's still the same caps for individuals. It was that 46,154 number. That was
for owners.
That's for non-owners. Those are for staff, and for owners it was 15,385, which is a weird number. And I assume it still has a 24-week period under the new one.
I think it's 8 to 24 weeks.
Okay, so it's still almost exactly the same rules.
And the new loans are all 5 years.
Okay.
If you got your loan after June the 5th of 2020, it's a 5-year loan. Now, I did read today that if you got your loan prior to June the 5th and don't have it all forgiven, you can actually negotiate with your lender to extend it from 2 years to 5 years.
Okay.
I can't imagine a lender is going to agree to that.
No.
At 1%.
Based on our luck with the lenders, I would say no. They're going to do what they want to do.
Since they know what they're doing.
Mm-hmm. Right. Yeah, but 1%, you could hardly beat that. And under the new rules, you've got a greater chance than ever of 100% forgiveness because the idle's not going to reduce it. Your only real problem of getting a reduction is if you cut your staff.
Yep, that's it.
Yeah.
Same thing, just like last time.
Yeah.
And it's less of a risk, in my opinion, this year than it was last year.
Sure.
Yeah.
Yeah, so they're going to be in good shape on full forgiveness on this round.
I agree. Any other questions you got from your clients?
The only other one that I can think of is, again, going back to the application. I think there's a section that asks for how many employees do you have, and it doesn't specify if it's FTE or the actual body count.
This is on the PPP round two application.
And this person ultimately decided to go with the number of employees. And, she made a good point. She said, if they are going to use the 941s for support, you have the number of employees. They're not FTE.
You don't have hours on a 941, so you can't figure FTEs from a 941.
No. Right. So I would say that's probably the safer choice, the actual body count.
I see.
How many different employees do I have? Not dead body count.
Right,
This would be live body
working.
count. Yes. Okay, so I think that kind of covers round two for the most part, unless there are more specifics. Have we gotten more specific questions?
I don't think so. I mean, I pretty much covered the questions I've heard from clients, and most of it has to do with the application process and how the banks are telling them different things again than what we're telling them or what the SBA is promulgating. There was something I was going to bring up a minute ago. I can't remember now what it was. I think it had to do with the automatic forgiveness, again, is $150,000. That hadn't changed. Something about documentation.
Right. And I think I know what you're talking about because a lot of the banks are still using their old portal for the forgiveness. They haven't updated their...
Well, SBA hasn't updated the forms either.
I see.
So that's probably why. Yeah, because I looked at them this morning, in fact, to see. Because they changed the simplified... They changed the fact that there is a simplified method for between 50 and 150,000. I assume that's going to be on the the simplified form, but they could make a whole new form. I don't know. There's no revision. So the simplified form still says 50,000, and there's no new form. And if they haven't updated it, I'm sure the banks haven't updated it because there's nothing to update it to. So they're still behind on that.
I think they're focused on the new loans.
Right.
Yeah.
Right. So unfortunately, we were saying delay your forgiveness application because we were hoping for that 150,000 rule. Now we've got the rule, but no forms. So we're saying delay your forgiveness application because there's nothing you can do yet.
Right.
No, and again, I've had clients asking me, this week, should we apply now?
Right.
It's like, no.
I would have said yes.
because-
Right. I would have said yes because there's really no more reason to delay. But again, there's no urgency. You have...
Well, that's one of the most misunderstood
Yes.
things is they keep asking me, how long do I have?
Yeah, and the answer is there is no deadline. Until you have paid your loan in full, there's no deadline to apply for forgiveness. But whatever you've paid, you do not get reimbursed. But if you apply within 10 months of the end of the 24 weeks, I'm sorry that I'm speaking like a law, but that's the rule. So most of your 24 weeks ended around October.
Right.
You have 10 months from that date, whatever that date is for you, before you submit. As long as you submit for forgiveness within that time period, then you don't have to start making payments. And then you have I think the bank has 60 days to process that application, et cetera.
And you don't have to make payments during that 60 days
Right.
either. You don't have to make
You don't
payments
have to make
until the
payments
SBA makes a decision
makes a
on
decision.
forgiveness.
That's right.
Yeah.
So as long as you apply within that 10-month period, you don't have to start paying. And if you don't start paying and you get forgiven, then it's all good.
And so the real deadline is sometime this August.
Right. Something
Right.
like that.
I
But you have to
promise
apply.
we'll apply
yeah.
before that.
Yeah. But once these new regulations come down, there's assuming you didn't have a reduction in in the number of hours or 25% of their hourly rate, then there's no reason to not just move forward with the application because it's going to be pretty simplified. If that does not apply to you and you did have those employee reductions, the application I think is fairly complex in my opinion, and I would definitely be getting a professional to handle that. That, again, my opinion. I think the other ones are not going to be that big of a deal. But that full application, when the accountants have trouble working through it, then I don't really want a client doing it because you've got a lot on the line here. You've got a lot of money that could risk not being forgiven.
Well, and what about those that already got forgiveness but had their idle grants deducted from the amount of forgiveness?
That is being reimbursed, so that will be forgiven. The SBA came down with the ruling that it will also be forgiven. So even if you were forgiven a partial piece of your PPP and they kept that $10,000 amount on there, that will be reversed, and you should get notified that you do not have to pay that.
All right. Great.
Which is the good news. Because I wasn't sure. I was afraid they'd be out of luck, honestly.
I was too.
Yeah.
That's pretty much all good news.
That is all good news.
It's just not that complicated, but it's precise. You have to do things a certain way and just wait on forgiveness still. I know we keep saying that, but that's the best advice we can give right now.
Not much longer. We're getting closer.
Almost there.
Yeah,
That's
we're
true.
almost there.
Yeah.
So hopefully by the time we do the actual PPP Forgiveness podcast, which was supposed to be today, then it'll be time.
I told someone this morning, I think about 3 weeks from now
You think that's it?
is probably when they'll start getting all their portals updated
Okay.
and be ready to take the applications, the new
For PPP
forgiveness
round two.
applications.
Oh, forgiveness. Okay.
Yeah.
Forgiveness applications.
Yeah, that seems reasonable to me.
Okay.
So great. Thanks, guys.
All right.
Yeah.
Thank you.
Thank you.
Thanks for listening today. Be sure to subscribe to Beyond Bitewings on your favorite podcast platform. For more info, you can follow us on Facebook, Twitter, and LinkedIn, or reach out to us on our website. You can also shoot us an email at info@eandassociates.com.